Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, July 27th, 2011 is sponsored by Realtic. All right, let's get into the mix today. Some big things on Wall Street. Debt worries continuing to jump around, keeping the Dow Jones Industrial Average down over 100 points, NASDAQ down 55, and the S&P down about 18 points. It's basically 1 to 2% drop across the board. NASDAQ taking the biggest hit, although that was the biggest gainer recently. So again, folks, you can see from the chart in front of you, you're looking at the SPY. The SPY mirrors the S&P 500. It's the ETF that tracks the S&P 500. And again, keep a close eye into the afternoon session. You can see you're hovering around this lower level of support. If I zoom out on the charts here and show you exactly what's going on, notice this little pivot low here. Take that line, drag it right across, and you get a little gap window. You're holding the gap window. If that gap window gets taken out, and we can actually remove that upper line since this is the main one right here. See this gap? That's the gap window. If that gets taken out and you start to fall, you're going to go all the way down to gap fill down here, which again is at the 130.65 level to 60 level. That will be a major, I repeat, a major level on the stock or on the markets here, and ultimately will be the next major support level. So again, it's very key if the market's not going to break down and have a big drop, a secondary drop today, that it holds on to this first blue line. All right, again, any sort of break takes you all the way down to the green line here at around $130.65. Okay, now again, let's just go back over what's been going on intraday. It's been actually a fantastic trading day with a good amount of volatility, up, down, all around. There were some long scalps and some short scalps this morning, some small caps. In fact, one of the small caps was the biggest gainer we have had in a while. I gave this next one out at $1.25, and there were plenty of shares to buy at $1.25 and $1.26 on the small cap side today. Take a look at this chart, guys. This chart, look at this. Right here, you could have bought as much as you want. The low of the day was $1.16 to $1.25. That's where we gave it out right here at the open. The stock runs from $1.25 alert in the intraday stock chat to a high today of $3.28. That's almost a 200% increase from our alert. Again, a lot of our traders got about $1.25 to $1.26 entry down here. They had drug news. It was under the radar. I gave it out, and it ran like crazy. And look at this move. I mean, it's not every day you catch a stock, and you're in a stock that moves 150 to 200% in one, I repeat, one day. Truly amazing. In any case, that was the small cap of the day. There were some other great plays. Chevron was a great play here. Let me bring up that chart. See this bottoming tail right here? We got the bottoming tail. I said buy on a retrace back to 105.85, which is the key methodology point that we utilize. We don't like to buy long tails on bottoming tails, which is a bullish signal, because what happens is your stop has to be underneath the close, a close below the low of the bottoming tail. So what you do is you wait for a retrace, and this is something we teach to our members in the Research Center and the Intraday Stock Chat, and ultimately it retraced beautifully right there. You can see getting filled right there. And then look at the move up on an intraday trade on Chevron. And again, buying at 105.85. I pocketed personally, I think 45 cents on the first half and 60 cents on the second half myself of that position, which is a very big scalp. That's a big scalp. Usually scalps, you're looking for 20 to 25 cents on a $100-ish stock or ETF like the Spiders, 20 to 25 cents on a scalp. When you can take 45 to 60 cents, that is an amazing scalp on the long side. Now, there were a couple scalps on the Spiders out there as well today, but again, the key is just understand the methodology. Utilize the trend lines on the charts. If I put up the charts here, you can see again the trend lines right here. Look at this beautiful gap window. This was actually another call today that I gave out, which was a gap window buy. Again, if we zoom out, you can see that level right there. That was another trade, and there's other small caps that are running today that I want you guys to be paying attention to, although, again, I'm going to save them for the Research Center. I want the Research Center guys to be profiting. If you want to get involved, if you want the small cap calls, if you want the long, large cap ETFs and the long, large cap key plays out there on the swing trade basis side, that's what you have to do. You have to join the free trial of the Research Center and get that all, or join the intraday stock chat. Now, looking at this market again, it's hanging on this little bottom level here. This is a big level. Now, Washington is still stuck. They haven't figured out a way to get past this debt ceiling yet. It will happen, in my opinion. I think the pullback over the next day or so, either today or tomorrow, you're going to get something probably by Friday or latest on over the weekend in terms of the debt ceiling agreement. So I think, honestly, the buy is going to be to accumulate some long positions here. And you don't want to overload. Overloading is not smart, just in case on the off chance it doesn't happen. But to pick up a few select positions here, I think is a very, very good idea. All right, and again, we'll follow that very, very closely here. I have trades out there in the research center that are getting triggered today. I'm going to be putting out some more this afternoon and possibly tonight. And again, we're just going to take a few positions here on the anticipation that you will see a debt ceiling raise. Wall Street is panicking because maybe there won't be one. I think that's just panic. There's no way the politicians out there, all they want to do is get reelected, right? So if they don't do something, trust me, they're not going to get reelected. And they know that. They have to do something. And again, I think that's the key, to utilize that and make money. By the way, another small cap that ran today, FONR, which was last month's hidden gem. Folks, last month's hidden gem hit a high of $2.70 today. I gave it last month as a hidden gem play at $1.88. $1.88 to $2.70. That's over 50%. That's essentially the target at this point. Target has been achieved based on the move up today. Members in the research center who took that hidden gem last week should have been selling right about 260 to 270 for 50% gain, all right? I still actually like it on the upside. You can see it pull back today. It's only up 13 cents, but I still actually like it on the upside. If it gets back below $2, I think it looks attractive. This month's hidden gems are up an average of 20%. As of the end of last week, and we'll see what they're doing this week. But again, average 20% gain already in this month's hidden gem. I believe next week we'll have a new hidden gem to be released. So again, take that free trial, guys. Get involved early next week. New hidden gem released for the month of August. Going to be fun, guys. There's money to be made. I love the volatility in this market because, again, being neither bullish nor bearish on the market overall, all we look to do is take advantage of the moves up and the moves down in the market on a swing trade basis. Picking up a stock and holding it for a day or 2 or 3 days, getting 5 to 10% out of it, exiting it, then looking for a different play, whether it's up or down, who cares, as long as you're making money. All right, and that's the new way. That's the new brand of trading. Swing trading is the biggest growing group of investors out there. If you're not doing it, you're missing out. Trust me on that one. So much money to be made. Good swing traders making 100% a year in their portfolio. No doubt about it. Good swing trader. That's what I do in my portfolio or better. And again, as we teach people and train people, that's what they're doing. And again, you get that in the research center along with swing trade alerts and so forth. All right, let's go to the dollar today. The dollar is stronger today, so showing some increase here. And again, that's kind of going sideways and keeping the market under pressure. Up dollar generally puts a little bit of pressure on the markets. We'll see if that continues to be the case. Again, keep your eyes and ears on the government right now and on Congress and so forth to see if anything does start to look valid, in which case the markets should get a big bid on that. Let me take a look. GLD today. GLD is actually a little on the weaker side because the dollar's up so strong today, although GLD is not falling that much. SLV is also down a little bit on the day, down about 60 cents. That's a little bit of a bigger fall. And the USO is also getting hit a little bit today, down about 70 cents. So commodities, again, on a strong, strong dollar are taking a hit. Stocks out there. If oil's down, what do you guys think Chevron's doing? Down, right? Makes sense. That's exactly what's happening here with Chevron. Again, I scalped this earlier today. I showed you the scalp right here on the move up. Nice little base, possibly forming a little base. I actually like this as bullish consolidation on the Chevron chart. Might be getting ready to make a move up here in the afternoon trading session. So watch that very, very closely. All right. I'm going to keep a close eye on that as well. Let me just see if there's anything else here. Exxon obviously is down as well, although not down that much. Nice comeback on Exxon off the lows. Some key stocks, Amazon. Amazon had earnings yesterday. It's coming off those levels because the market's so weak. And again, in all fairness, Amazon keeps hitting new 52-week highs and all-time highs up here. So it's not surprising to see a pullback, but it's still having a good day considering how ugly the markets are. Apple Computer, after continuing to move up, is taking a hit today, down about $8. Google's down about $12 on the day. So you can see it's a broad-based sell-off out there. There's not many sectors out there that are overperforming. I would say the financials are the one area that look to be a little bit stronger than the rest of the market overall. Aside from that, everything else is pretty much on the weaker side. All right, but in any case, bottom line is this. The money continues to be made here at InTheMoneyStocks.com. Whether you're in the chat room, whether you're in the research center, you're getting ready for the next big move in the markets. You're day trading. You're making money on small caps, large caps, ETFs. Doesn't matter, up or down. Whatever the market's telling us, that's the way we're positioning ourselves for the next big move in the market. Take the 7-day free trial. You can take it, no obligation. As long as you cancel before the end, you're not charged. Very simple. No games, no gadgets, no nothing. All right. Have a great afternoon. We'll see you tonight inside the research center as more trade alerts are put out.